Welcome everyone. In our series of critical aspects of filing corporate income tax return, in this episode we are going to talk about important issues to be mindful of when the return is being filed, and especially for the first time. So my name is Naveen. I'm sure most of you are aware, and with me I have my partner CA Balaram Vuchidi. So welcome Balaram.
Thank you, Naveen.
So, Balram, my first question to you would be, what are some of the important points to be mindful for any taxpayer or businesses while filing their first corporate tax return?
Yeah, I think it is one of the important area to look at. Not even while filing, but before filing also, one must make sure that the registration form that is filed, the classification of the entity and the various information or elements that you've submitted as part of your registration form should be right. Now, of late, we realize that there are instances where the entity type was wrongly given. Classification of your entity is wrong. The period given as financial period is wrong and not as per your memorandum of association. Various other information that you provided which is not right. These mistakes are now being identified when you review later. So these are definitely going to impact your taxable person position. For example, you are a foreign company and you have a permanent establishment here.
Yeah.
Right. But if instead of classifying that as a foreign establishment or foreign entity, considered as a taxable person based on PE if you're classified as POEM.
Yeah.
Because in the form you have to elect all those things.
Correct.
So there is going to be a consequence of that in which under PE you are subject to tax for the income that you generate in UAE.
Yeah.
Whereas in POEM, it is not just the business income that you generate in UAE, but also your foreign
Global
business related income and global income related to that foreign entity
Absolutely.
is subject to tax in UAE. So you see the difference now?
Absolutely.
Just because of small mistake, the taxability of your income in UAE and versus taxability of your global income of a foreign company is going to depend.
Yeah.
Is going to be there. So that is the reason why I say not just this, but you also need to look at your registration that you've done and then the kind of registration that you've got as a category of entity is important. So likewise, so your category of your entity or type is going to be important one. So accordingly, for resident, non-resident, tax transparent. For example, if you have an unincorporated partnership, do you want to consider that as a tax transparent entity, or do you want to consider that partnership as such to be subject to tax?
Correct.
So these are the various decisions. Family foundation, for example, there also you have tax transparent.
So these elections become mandatory.
Yes. So based on that, your taxability varies.
Correct.
And then your tax amount also may vary.
Absolutely.
So because of which you may not get some of the tax benefits that you otherwise were eligible will be lost.
And even the tax grouping elections, if you have, or the transition rules elections, those also have to be
correct. Yeah. So the group elections and all those things come later.
Correct. Okay.
After you're registered.
Right.
If you are meeting the qualifying conditions to become a tax group from the beginning of the year, you can apply for that anytime during the year. It's better that you apply from the beginning, but you can also apply as long as you're able to meet those conditions throughout the year. Right. And at the same time, the books of accounts should be maintained properly. The relevant information that is required to file the returns should be ready before you go for corporate tax return filing. The accounting schedules that you require, like your allowable expenses, each account related schedules, your interest related detailed information. Okay. And your entertainment expenses related schedule. So all those schedules, your transactions with related parties, your payments made to your connected persons, and making sure that whether they are at arm's length, whether they are at market rate, market value or not. So all these details you need to keep ready and then go for corporate tax return filing. On top of it, you also have various elections as part of your transitional rules. You want to consider some of your assets gain or loss when you sell it later, whether you want to make that entire gain or subject to tax based on your valuation, whether you want to divide your income or gain from that sale transaction to be subject to tax in full, or do you want to consider only the period relating to tax regime. So these elections, at the same time, the elections with respect to your assets and liabilities, whether you want them to be subject to tax on realization basis or on realization basis.
Yes.
So these are the kind of elections that you are expected to make in your first tax return, which are not revocable later on. Means once you select in this current year in the first tax returns that you filed, these will be expected to be complied with by the business for a long period. You cannot go back and change that election later on. So that is the reason why it is not your regular tax return that you're filing, but it is a special tax return that you're filing, being the first tax return. Various elections, various options to be elected properly and concluded on that properly. In addition to that, if you are a qualifying prison person or a prison person, assessment of your eligibility for qualifying prison person or electing for subject to tax at normal or regular standard rates. So these decisions also are important, because once you elect for this, once you're not going for a qualifying prison person, that will have impact for next 4 years also. So these are the various kind of elections that you'll have to carefully look at, analyze properly, which is beneficial for a business, and then accordingly take the decision and go forward. So the first return that you're filing is going to be very, very important. Lot of analysis is required, lot of documentation is required, lot of judgments are required, and then go for the filing of it. So this is the reason why we advise a lot of businesses to analyze properly, take the help from external consultants if required, for the first time at least, and then make sure that your decision opposition is rightly done.
Is it only filing of tax return, or any proof or evidences are also to be given?
As I mentioned, there are a lot of areas where you will have to have some supporting document. One of the primary document that FTA is interested in looking at, and in the law also they clearly mentioned, is the financial statements. The financial statements which are prepared by following IFRS is going to be one of the crucial document for FTA, for the tax authority to look into. And that is a basis for you also to prepare the corporate tax returns.
Right.
So that obviously is expected to be there by following the IFRS, and that will be your one of the main important document to look at.
Right.
Not only that, as part of your transitional provisions, if you want to get any benefit of your gain related to pre-tax regime and post-tax regime division, one is expected to have valuation done for your assets.
Yeah.
So you need to have the valuation report of your assets as on your first date of as an opening date of your first tax return.
Yeah.
For most of the businesses, it is 1st January 2024.
Correct.
So you need to have valuation report, a valuation done for your asset, and then valuation report is going to be your document to look at and attach to your first tax return. Though it is considered as an optional one, but it is a document that you have to have in place. In addition to that, if you have any transactions with your related parties, or if you have any payments to your connected persons, you are expected to make sure that they are done at arm's length, or the payments are at market value. So what kind of documentation do you have to support your transactions and transaction value is also going to be important. FTA is interested in looking at that whenever they come for inspection, or there are sections where you are expected to upload these documents to support your transaction also. So that is another evidence that you have to keep in your as part of your records. If you have any transactions done with your foreign businesses, if you have paid taxes on your income that is in foreign as well as you're paying tax here. So in that case, if you are expecting to go for foreign tax credit, you are expected to have your TRC or equivalent documentation getting from your foreign businesses or foreign tax authorities, and other evidences of making the payment of taxes in those foreign jurisdictions are also going to be important.
Right.
Plus, in general, also as record keeping practices or standards, you are expected to have your documents, invoices from your suppliers, invoices that you have raised, and contracts that you have for various transactions.
Yeah.
The regular documentation that is expected is also going to be an important one to look at. Plus, the documents that you have to have minimum 5 years was in your VAT.
Yeah.
For corporate taxes, they mentioned that it has to be minimum 7 years or more. So all these documents you have to have.
Yeah. Just highlighting on the previous point of the tax made by SBCs, the software, I think the documentation becomes very, very important and very useful if they are in place and if they are at one place, so that tomorrow if FTA comes for any inquiry, or tomorrow let's say if FTA sends you an email with any inquiry, I think all the information is at one place. So I guess the software again becomes very useful for this.
Yeah.
Right. Is there anything specific or important about filing the tax return for the first corporate tax period, Balaram?
Right. I think to some extent we've already covered this area, but
Yes.
it's just to summarize.
Yeah.
As I mentioned, so you have transitional reliefs given
Yes.
with respect to the assets that you own before CT regime. And if you're selling those assets after the CT regime or during the CT regime, whatever gain that you realize from that particular sale transaction of the asset.
Yeah.
So whether you want to consider that gain to be apportioned between CT regime before and after, and accordingly consider for taxation purpose, that is something that you have to clearly decide in your first tax return itself. And you also have other elections that you are expected to go for, whether you want to make your transaction subject to tax on realization basis or unrealization basis. So that also is another election that you have to do or make in your first tax return itself. And these elections are non-revocable. So once you elect, then it will be there forever. In addition to that, if you have any, as I mentioned, opening balances, that opening balances should be at arm's length. If you have any balances payable or received from your related parties, your various tax positions that you make should be analyzed properly, and then make sure that you have made them properly. And if you are particularly a free zone entity, and the assessment of eligibility for qualifying free zone person, and then classification of your income subject to tax at 0%, which is a qualifying income, and income which is not a qualifying income subject to tax at 9% straight. Computation of your de minimis, and then accordingly planning for that and making sure that you are not breaching the threshold of de minimis amount, whereby you are losing your status. So this analysis also is important. If you wrongly classify or assess that you are not subject to meeting the conditions of qualifying free zone person in year 1, you will have impact of that for next 4 years, whereby you will be ending up in paying taxes. So this assessment in first year itself should be a proper one, whereby you're not making a wrong decision and then losing the benefit for next 4 years.
True.
So this is also another important one to look at. And on overall basis also, classifying your business or your positions, risk positions and all those things, making or maintaining proper records, bookkeeping is important, classifying your transactions accordingly. So all those become important. In addition to that, the free zone entities, one of the important element to look at is that if you have a free zone entity and the business income is less than 3 million dirhams, some people may think that going for a small business relief will reduce their work while filing the corporate tax return. You have to make sure that you're not going for that small business relief just because you want to reduce the amount of work for filing the returns. Once you elect for small business relief, it is considered as you are electing for a standard corporate tax rate regime. Which means you're not electing to be a qualifying free zone person, whereby you're losing the status for that year as well as for next 4 years. So if you are a qualifying free zone person, even if your revenue is less than 3 million dirhams, it is advisable that you should not go for small business relief, but you will be filing a regular return by following all the conditions and requirements that are expected to be filed for. So these are the various areas that one should look at and make sure that they are making the right judgment, right decision, going for the right elections, making sure that the analysis, assessment is done properly, and making sure that the documentation, arena of documentation is maintained.
Absolutely. I think it's very well summarized, all the points, key points which a taxpayer, whether a regular taxpayer or a QFZP, needs to consider before they embark on filing the return. So I have another question, Balaram. Large majority of the taxpayers follow January to December, as we know, as their period, and would probably have their first return in September this year. How are these taxpayers placed? What do you think about them?
Yeah, I think it is one of the important things to look at. As we know, this is first time that businesses are complying with corporate tax law and then filing.
Yeah.
No matter how much amount of preparation you do, when you go for filing, you may still realize or identify that there are some things that you missed, something that you not identified, or something that you did not make the decision in the right time. Correct. So it's not early. Now we are already late in my understanding that.
Yeah. We already have only 2 months?
We only have 2 months for general businesses. But if you are a business with late registration penalty,
you only have one week, I guess.
You only have another 1 week. Now we are on 23rd July.
Yes.
So you only have 1 week to 8 days to file your first corporate tax return in order to avoid paying that late registration penalty. Right. So it's already late. You have to definitely prepare in advance now. Most of these small businesses, to be honest, are not there yet.
Yeah.
Right. And some of the medium-sized businesses and large organizations are also still in the process of preparing for corporate tax return filing. So they have to definitely rush and then make sure that they are filing them in time or preparing for the filing in time. As I mentioned at the beginning of our episode, that it's not just only the filing, but you also need to assess or review your registration that you have done. Because based on the classification of your entity, the taxability will vary.
Can vary, yes.
So can vary. So accordingly, so you have to review that.
Yes.
You have to make sure that the elections are done properly by performing the proper analysis. What position is going to be beneficial for you, right? And what is not. Accordingly, do you have enough amount of documentation in place to support your position? That also will be an important area to look at. So all these things definitely will take a lot of time. Identifying some of the businesses, they don't even identify that they have transactions which fall under related party transactions, whereby they require to comply with the transfer pricing rules. If you don't identify, of course, you will not be able to assess whether it is at arm's length or not, and then follow. And consequence of that is that you may or may not be doing those transactions at arm's length, and then non-compliance of the law is there.
True.
If you are a free zone entity and if these situations are there, you may also end up in losing your qualifying free zone person status, and as a consequence, you may have to pay full tax on your total profit, though you are a free zone entity.
Correct.
So the other consequences that you may have. The other documents, as I mentioned, valuation report, opening balance sheet to be reviewed properly, and elections to be done properly. All these things take a lot of time. So you are expected to prepare a right amount of documentation, perform right kind of analysis, and then decide. So you have to work on it now without delaying further, and then be ready with all the required documentation, analysis, and information, and then accordingly file the returns properly in time.
Precisely. Absolutely. I think this is very, very important, and especially now when we are already in end of July, you practically, the taxpayers have only 2 months to be completely adhering to the rules and regulations, to be completely ready and file their returns before 30th September and pay the taxes. One more important thing which I want to highlight or I want to discuss is FTA has been consistently sending reminders to all the taxpayers that please file your tax return. Your tax return is due by 30th September, but do not wait until the last day, because we have seen many times that the system doesn't support because these are all electronic filings. So the tax portal sometimes doesn't support on the last day, and there might be a chance of non-filing, and which can raise a consequence of penalties. So obviously we do not want to see that situation for any business and for none of our clients. So I think it is recommended that the tax filing is done before 30th September, and do not wait until the last day. Now, having said that, obviously the conditions or the preparations which you have already earlier discussed and mentioned, those needs to be done more rigorously and much earlier. You have a little bit of breather or a little bit of time. So I think this is also one of the important area perhaps the businesses should think about and make that in their overall plan.